Hello and welcome to the High Altitude Investing live stream. Today is 6/12 of 18. Let me just make sure my microphone is turned up nice so that you can all hear me. Okay, so today we're going to be talking about how to remain calm during a sell-off and how to think during a sell-off so that you don't panic sell, and just how to keep a clear head and make the proper trading decisions based on TA, and so you can make money and not lose money during sell-offs. So yeah, let me just go ahead and get my screen going and we'll see how many people start tuning in today. Yes, there's definitely panic in the market today. This is pretty normal. In my last stream, I talked about how there was a potential for another low near 65. So this isn't anything that I didn't expect, just so you know, so that you don't get scared or anything. But of course, you're going to feel some human emotion. This goes right back to everything that I teach on my channel, where human emotion has the majority of the effect on prices. So right now, everybody's scared as hell. I mean, if you go on Twitter, if you go anywhere in the crypto space, people are freaking out. And everybody and their mom is shorting this market right now, which is very typical in consolidation ranges, especially as you near the bottom of support. So I'm going to teach you, how to keep a clear head through all of this and, just make the best trading decisions for yourself, because there's a couple different outcomes that can happen here. I'll show you what's the most likely to happen, and then if support fails, I'll show you how to plan that so that you don't get screwed if we correct closer to 5,000 and possibly even lower than that. So that's what today's live stream about. Towards the end of the live stream, you can always request altcoin TA, but I would say probably for the first 20 or 30 minutes of this live stream, we're just purely going to be going over the emotional aspect of sell-offs and how to handle them. So yeah, welcome everybody that's tuning in today. Looks like we got a few people tuning in. This wasn't a planned live stream. I was going to make a YouTube video today, but in days like this, it's really better for me to just do live streams so that I can answer your questions live and make sure that none of you guys are freaking out or panic selling and making the best decisions for yourself. So that's why I like to do these live streams in panic days, even though technically I had it from start to finish video planned. But it looks like the stream health is doing fine today. Let me know if volume sounds good and all of that stuff so that we could continue moving forward in the stream. Yeah, exactly, Lazy J. Every single time I throw this fedora on, that means business. That's what that means, is business. So, all right, cool. So, Bitcoin. Everybody is freaking out right now. And it's just so typical of crypto markets and really any market in the world, honestly. This happens in the stock market, but with cryptocurrency, it's a little bit different because things happen like that. Whereas the stock market, you'll be watching it, and it might take like a month for people to panic. So it's like the panics happen a lot slower, but with crypto, they're really fast. So crypto is a 24-hour market. It never sleeps. So that's one of the reasons that it makes such quick fractals. And the other reason is that it's really innovative technology. So a lot of money comes into it quickly, and then when everybody realizes it's overvalued, a lot of money leaves it quickly as well. So I am on the logarithmic chart on 3-day candlesticks. If you want to add 3-day candlesticks to your trading view chart, you can drop down this menu, scroll down, and then click on this, and then you just type in 3, and then you just click on days, and then you just press add. And that will add 3 days to your candlestick list. I like to add 8-day, 5-day, 4-day, 2-day, 1-day, 12-hour. As long as I have as many different time frames and perspectives that I can look in, it's always important to do so. So I really like the 3-day candlesticks when I'm doing logarithmic big picture perspective on what's happening with Bitcoin. Mainly just because it gives you a lot of data, really, since I started getting into Bitcoin, which was in 2015. So it gives you the price action from clear back here all the way up till today. All right, let's double check on the stream health, make sure we're doing good on that. because I'm starting to get a bit of lagging on my computer. Yeah, I agree with you on the getting a little bit more sleep due to the 24-hour market thing. That's funny as hell. But yeah, so let's open up this Bitcoin chart here and we'll start doing some TA on it. I may need to remove my webcam again from the stream throughout this, depending on the actual stream health. If it starts lagging bad, then I will go ahead and do that for you. But it looks like we're doing fine right now. So this is called an ABCDE triangle correction. Now, this is a very, very common correction pattern. You've seen this happen in, really, Bitcoin did it multiple times throughout its life, actually. And a lot of markets do these triangle correction patterns. So they're very, very common. If we zoom in here, you can see that the top of this wave was at 20,000 and the bottom was at 61. Well, just actually under 6,000 was the bottom of that. And then we had another top around 11, another bottom around 6.4, and another top around 10, and potentially another bottom at 6.5. Now, if support has a failure, you're going to want to be watching these numbers. There's a 4,800 as a major support. Below that, you've got 3,000. And then finally, the most drastic and highly unlikely option is 1,000 or 1,300, this range right here. This is just where we've previously seen resistance in the market structure, where prices has reacted. So those are levels that you're going to be watching and paying attention to. Now, this is very interesting because when you have sell-offs like this, everybody on Twitter and everybody in the whole crypto space right now is considering this a complete support failure, but that's actually not the case. So I want to talk about that. Because often, not only is support failures a false breakdown, so a lot of breakdowns and breakouts are false. Let me just zoom in a little bit here. But support actually isn't technically broken until the key levels of horizontal support and resistance are broken below. So, for example, although, yes, technically, if you draw your lines like this, you have a drop in the a failure of support, right? If you draw your lines like this, right? But if you zoom out and you give a little bit of leeway in the market due to high volatility and keep a clear perspective on everything and allow the market to kind of shake out buyers and shake out sellers as it will, then you can actually see that support and resistance is a pretty clear zone. So let me show you what the difference between a support and resistance line and a support and resistance zone is. So here's a support and resistance line, what I showed you earlier. Now here's a support and resistance zone. Okay, I'm just going to take this, go from here on over to here. Okay, and then we can take this line and we can draw another one from here on over to here. Okay, and then we can take this resistance line and draw a resistance line meeting at the tops. Okay. Down. So if you're feeling fear right now, that's completely normal. But, hold on, I'll talk about that in just a second. But you never want to make trading decisions based on the emotional feeling that you have. Because if you have an intense emotional feeling of fear, odds are the rest of the market is having that exact same feeling. And what do good traders do? They buy fear and sell greed. So if you're having an experience where you feel fearful in the market, odds are somebody on the other end of the computer screen that really knows what they're doing is buying your fear. So if you're selling, then you're contributing to the fear emotion, right? You're contributing to the fear in the market. Whereas if you think opposite of that and keep a clear head, step back, allow for some volatility, a little bit of shakeouts, and watch your support and resistance zones, look at this. You can all of a sudden see that there's actually quite a bit of a range here that we've been moving in. So when you draw your lines, you have to be willing to adjust them as needed. Sometimes the market has a false breakdown. Sometimes it goes a little bit lower than expected. You should never expect your technical analysis to be perfect. It will only hurt you if you're expecting your perfection in your technical analysis. You have to be able to move your lines and adjust it as the market moves and have a little bit of leeway if there's a breakdown or a breakup, because it could be a false breakdown or it could be in a support and resistance zone, and panic selling right when it hits that support zone is the worst idea possible, because even if this fails, even if support fails at 64 and even if the horizontal support fails at 6,000, this market is likely to retest the resistance zones in which the failure of support occurs. So if we just take this line, oops, let me delete this. We just take this paintbrush. If support fails and starts to impulse down towards 69 and breaks that major support, the market is very likely to come retest what used to be support and find it as resistance near 66 and possibly even 67 in this zone, in which case it would then continue downwards further, right? So you've always got an opportunity to take out if there's a support failure. But if you sell directly onto support, you're selling where wells are accumulating and buying. So it's literally the worst possible decision that you can make. So in trading, whenever you have something do not as you expected, or even though I did mention in my last live stream that a retest of 65 and 64 is a secondary potential outcome, even if it does something that wasn't originally in your plan or wasn't your primary prediction, you always have waves, you always have shakeouts, you always have resistances that retest and supports that retest to get in and out of that market so that you never have to sell onto the bottom. You can confirm that support fails before you sell. So if this does completely fail, again, you go over here and you find your resistance, your support zones in the past, and you draw a horizontal support. And you find your next resistance zone and you draw another horizontal. Support zone, excuse me. So, if this range that I've drawn fails as support, you can go ahead and draw this on your trading view too if you like. If this range completely fails as support at 64 and we start to see impulsing below 6,000, you can expect a retest of the levels that we're seeing right now, and then you can get out. You can take some tether out. I recommend telling people to always have 30% tether, but if you want to take some more tether out and have closer to 60 or 70%, never go 100% out or in, then that's something that you can easily do in this scenario. But you don't want to do that when it's still on support. That's selling support. That's like the worst thing that you can do. There's people that sell support and buy resistance, and that's like the most emotional thing that you can do, essentially. So if you're new to this, it's gonna feel right to do that. If you haven't traded for much and you're starting to near support and you're at a loss, it's gonna feel good to sell at support, right? And then the next day when everything bounces, I guarantee you're going to regret it. So it's just about letting the market play out as it will, being aware of your personal emotion in that scenario, being aware that when it's dropping you feel fear, allowing that to not control your trading decisions, and then making plans for different outcomes. So in this case, my plan is that if we have a support failure, I'll take some more tether on the sidelines, and I'll aim to buy between 5 and 3 is the first major target for that. Now, as long as support holds, which is what I'm personally expecting it to, then I don't have to do that, right? But if I sell directly onto support today, I'll have to buy high tomorrow. And that's not good. That's a bad trading. That's not managing your risk. That's not using support and resistance. So it's really just about being aware of your personal emotion, sticking to your trading tactics, and then not letting the fear in the market control your decisions today. So now, again, I've always said anything is possible. So this could very well fail as support. Do I see that as the likely outcome? No. But there's always possibilities and there's always probabilities. So zooming into some smaller time frames, let's do some technical analysis on what's happened here in Bitcoin. As you can see, we had a complete test of the previous support that was met at 55112. We are on that perfectly currently. As far as the Elliott wave count goes for this move, this was an expanded flat correction. So this is a 1, 2, 3, 4, 5 wave down. This looks like this, a 1, 2, 3, and a 4, and a 5th wave down. The move up, we can confirm that this is an expanded flat correction due to counting the subwaves in the correction. This was an ABC up, ABC. And then the expanded flat means that the C wave, or excuse me, the B wave exceeds the height of the 5th wave in the previous move. So if we take this, 1, 2, 3, 4, 5. Do you see how the C or the B? These are all subwaves, so let me just go ahead and switch these to sub-micro. Or minuscule will work better in this case. Minuscule waves. And then you have an A down and a B wave up. See, that's where the B exceeds the height of the 5 wave. And then we can double click on this and then click on intermediate so you can see that that's part of the primary wave set that happened here. So this is a 100% retrace of the Elliott. So that means that this cycle retraced 100% of the first cycle. In that type of a move, as long as support holds, it's still a standard Elliott wave. So as long as the support that we're currently on doesn't fail us, then this is still a complete correction and can still be validated with a bounce and see more upside and continue to see more upside. That's the rule, is so long as the move doesn't retrace more than, oops, let me just pull back. So long as the move does not break the previous support, meaning so long as it doesn't retrace more than 100% of the move, it's still a standard wave and still can be validated. So let me just remove these out of the way. And zoom out again. Now, let's go to the live dashboard and let's ask a couple questions, because I want to ask you how you're feeling right now and get a kind of general perspective of the sentiment on the market with that. So let's go and ask some questions. So my first question is, how many of you think that we're going to 3,000 or 4,000? Just say I in the chat if you think that we're going to 3 or 4. Let's just get a head count here. It's okay if you really believe that. It's totally fine. No? Cool. You think 4K, 4 to 5K? No, no. No, 5K maybe. No, no. 5K. 4.7K. No. We're sideways from here. Oh, the mad cow coming in hot. 4,200, 5.5K. So, this is very, very interesting. Do you see how it's basically 50-50? This is very, very common in times of high panic. And a 50-50% ratio on people believing it's going to go lower and people believing that it's going to go higher often means that a lot of the beginners are, well, not necessarily beginners, but that just means that the sentiment on the market is 50-50. It's uncertainty. Now, what happens in high times of panic and high times of uncertainty? Well, often that's an opportunity. So if you're an opportunist and you see high uncertainty in a market and high panic in a market, what do you think smart traders are going to be doing right now? They're going to be accumulating that. They're going to be accumulating the panic. So don't fall into that aspect. Now, again, support can fail, but that emotion of uncertainty and that confusion in the market is actually what shows that it's more likely not to fail, because people don't know what it's going to do. Most people here, probably a lot of people in this live stream today, are feeling like, oh, I'm done trading, or oh, I hate this shit now. Like, when I was first learning all of this, I felt those things. I'd make money and then I'd lose it and I'd be like, oh, I hate this. This is so frustrating, and it would emotionally charge me. But once you get better at it and once you've done this for a while, that doesn't happen anymore. You can keep a clear head, you can keep a clear perspective, and you don't let the emotion and the uncertainty control you. It's crowd thinking. If you go to Google and then you just type in mass human consciousness or crowd thinking, then you'll start to read a little bit about how humans work. And the way that humans work is they do what feels right based on what other people are doing. So if like a huge majority of people are fearful and scared, then it feels right to follow them because that's what everybody else is doing. They're following the crowd, right? Whereas if a small percentage of people are scared, then everybody's bullish, right? And when nobody's scared, everybody's bullish. And when everybody's scared, nobody's bullish. That's the way it works. So what do you think's happening today? The amount of people that are short-term bullish right now is probably less than the amount of people that are short-term bearish. And you can witness this on TradingView. You can witness this on Twitter. If you just go look around a little bit, you'll see that the majority of the predictions are predicting lower lows, when really we're on support currently. So it's literally mass human emotion and mass crowd thinking. So don't fall into that. Be aware of that. Step back and allow yourself to control that emotion. Don't think with the crowd, and do your technical analysis, make your trading plans, and don't be too emotionally invested in the direction of this. It could go down, it can go up. Your job is to figure out what's likely to happen, bet your money on it, and make plans for both scenarios. So, I was definitely expecting to start this stream with some people freaking out in the chat. This happens every single time. You should have seen my YouTube channel in June and July, the correction in June and July. A lot of people were feeling the same way about altcoins, and I'll show you what happened because I've been through these corrections before. I've experienced them. I've seen the human emotion. I've experienced it. So let me show you what happened to Stellar Lumens, which was something I told everybody to buy right when nobody wanted to buy it. Let me just show you here. XLM, Bittrex. All right, so let me just show you what happened to Stellar Lumens. Pull back here. This right here was the correction that happened in Stellar Lumens between June and July and into August of 2017. This correction made so many people, and this was happening across the entire altcoin market, pretty much any altcoin that was on Poloniex, any altcoin, and the people that have been around in cryptocurrency for a while remember this correction well, okay? This, at the bottom of this correction, I was telling people to buy between the 786 and the 88% retracement. So I started telling people to accumulate between 1.4 cents and down here just below a penny, right? And no, but I remember doing a video and telling people to do that, and people were mad at me. They were angry that I was telling people to buy. They're like, don't you see that this is on a huge downtrend? Don't you see that this has been a giant market cycle and panic? And don't you understand that why would you tell your followers to buy the dip when it's going to go lower? Don't you care about their money? And I just remember getting so much hate posting this trade. And then literally it did 5,600% after the buy zone that I got in on it. And you can go to my trading view and see the chart that I made. I drew a buy zone right here and then told people to sell at new all-time highs. And look what happened to this chart after the market cycle fully completed. You went from being worth 0.008 cents all the way up to $1, just shy of $1 actually. So that just goes to show why you never panic sell and why you accumulate the bottom of market cycles, because the one thing that you never expect to happen is usually the one thing that happens, and especially in trading. But once you understand technical analysis a little bit better, you make trading plans for lots of different things that can happen. And then if your original plan doesn't play out, you just switch to your other trading plan and manage risk accordingly. So Bitcoin, everybody's like, well, if you look at Bitcoin, it hasn't completed a full retrace on its market cycle. So I want to talk about that as well, because Bitcoin has completed a full market cycle according to the market cycle graph that you can look on Google, and that's very, very popular in the crypto space. So let me show you what I mean. This is the takeoff period of the market cycle. This is where people that don't really know what crypto is are accumulating it. They're really smart and they see long-term gains. So this is called the takeoff down here, when it was just accumulating and going sideways. This is called the first sell-off. This happened between 5,000 and 3,000 per coin. This is where Jamie Dimon flooded the market and said that Bitcoin was a bubble. This is also where institutional investors get in. Usually early on when it's starting to accumulate and trend upwards and it's a clear, strong upward move coming, this is where institutional investors get in. Now, this is where media starts to talk about it. Now, do you remember when everybody on the news started talking about Bitcoin between 10 and 20,000? That's media attention. That's when the news is hyping it up. That's when everybody's excited. Everybody's seeing this to go to 100,000 right then and there, right? It's excitement. And being aware of that helps you control that excitement. This is why I posted sell signals and sold my Bitcoin between 10 and 15,000 per coin. I wanted to get one more a little bit higher because I saw a Fibonacci extension just below 30,000 that I thought that we were going to shoot for, but I didn't get out on that, and I'm okay. I accepted that because I managed my risk. I sold 50% of it between 10 and 15, so I made good profit. I've been accumulating for a long time. So I was managing the risk and being aware of my own human emotion in that period of time. Now this is where the bull trap happens, okay? This is where everybody expects it to return to normal. Oops, let me just pull this down. Bull trap. Okay, and then down here you have fear and panic and capitulation. Okay, capitulation means that people are 100% out of the market. So they've sold all into the dollar. They're too scared to hold their coins anymore. So that's a capitulation phase of the market. Now, what you do is you take this and you go from where the first sell-off starts and you draw a trend line. So if we draw a trend line from 3,100 up to 6,000 and then where we met resistance at 12.3. Let me just put this capitulation like right here actually. This is called the mean. It's spelled M-E-A-N. Oops. This is the mean. This is the lowest forming support trend line of the market cycle. Now, when it falls below the mean, this is considered despair. This is the despair phase of a market cycle. This is when everybody's depressed, everybody's angry, everybody's expecting lower lows between 5,000 and 3,000 per coin, and everybody feels good about selling. Just like everybody felt good about buying the top, everybody's feeling good about selling the bottom now, right? And it's just the human emotional cycle. I was expecting to do this live stream and have people come in here and say, no, panic, I lost so much money, and all these different things, because I understand the emotional cycles. I was expecting to see this. And it happens every single time, and that's the secret. That's the secret, is the awareness of it. Because if you can be aware of it, plan for it, then you won't get burned. You might not trade it perfectly. Don't ever expect yourself to trade anything perfectly, but you will be profitable if you stick to these market cycles and be aware of your personal emotion and human emotion. Now, in the despair phase of a market cycle, it always looks like it's got one more low coming. It always does. It always looks like that. In this case, I'm expecting a high probability of support holding for Bitcoin here. Due to the fact that we're below the mean, we found resistance at the mean, and we're making a triple bottom formation into the despair phase of the market cycle. You all know the market cycle chart, I'm sure, but in case a few of you don't, we'll just pull this up one more time. Right here. So, capitulation, fear, the bull trap, and despair. Do you see this lower line, this dotted line? That's the mean, right? You all can see that? Yeah, I'm sure you can. So that's the mean. That's the lowest trending support of the market cycle. It's where the first sell-off meets. So the first sell-off lands onto the mean, as you can see. First sell-off lands onto the mean. And then you have the really mania phase. This is all mania. At the top here you have new paradigm. This is where everybody thinks that for some reason there's a new paradigm and humans will never, or humans are different now. This time is different, quote, quote. Meaning that people are like, oh yeah, other markets fell, but this one can't. It's crypto. There's no way it can fall. That's not true. Every market in the world falls, gets overvalued and undervalued. It's the professionals that know how to properly graph these and understand where to put the media attention, the new paradigm, the bull trap, the capitulation, and the despair on the chart. And it takes practice, it takes time, it takes personal education. But as long as you're not buying into the fear and as long as you're not selling into the fear and buying into the greed, you're okay. Don't follow the crowd. Don't follow the crowd. That's the main message for today. Is everybody is expecting another lower low, which is exactly why it's not going to happen. And I'm not saying it can't. I'm just saying it's stupid unlikely for it to. So, now, so that's the main thing right there. Now let's draw some horizontal support and resistance. Let's talk about Fibonacci levels that we're meeting and kind of, continue to evaluate the market from a clear head. So down here at $640, if we pull up here, you can see that Bitcoin is in the 618 zone. So on the 618 Fibonacci retracement, you have a zone. This is between the 618 and the .65 retracement. This is often referred to as the Vegas wave or the golden ratio. And the golden ratio is the highest probability for a bounce in a bull market big picture. Now, yes, I agree with you that short term there was a correction, aka a short-term bear market for anybody that's day trading. But big picture, this is a bullish market. And so in the big picture of bull market, the .618 and .65% retracement is the golden ratio and the highest likelihood of seeing a bounce. Now, I used to only trade with Fibonacci, literally only trade with Fibonacci. It's a very, very useful tool. You can pretty much get the majority of what you need done with Fibonacci and market cycles, but Elliott waves are a very nice cherry on top of all of that. So let's go into the 4-hour time frame and see what's happening. In the 4-hour time frame, we had an impulse down. We had an impulse wave. This impulse wave is a 1, 2, 3, 4, 5 down. We can take our Elliott wave tool and draw from this point 1, 2, 3, 4, 5 waves down. Okay? So this is likely to see an ABC up or begin a new bullish market cycle from down here, according to Elliott wave theory. So on the smaller time frame, we're already starting to see support, a bullish wick, and a bounce. Okay, now let's zoom out and go to the 12-hour and pull down a little bit. Get a little bit of a bigger view here. Actually, let's go to the 2-day and pull down a little bit more. All right, so when volume decreases, that means accumulation is happening. So a lot of people have been like saying, oh, but the volume isn't there, or oh, there's no volume for Bitcoin to break out. As you can see, we've had a decreasing volume. This has happened, and this is common in accumulation phases. Now, what's interesting about this is only on Bitfinex, because if you look at the biggest cryptocurrency exchange in the world, which has the highest leverage and is the most effect on the price, BitMEX is the exchange, XBTUSD is the ticker if you want to look at it, you see massive increasing spikes of volume. Okay? So there's people accumulating this dip with high leverage. What's interesting about this market cycle specifically is that a standard market cycle retraces near, let's see. Actually, I just lost my train of thought on that one. Let's go back to the questions and see if we have any new questions to answer. let's see. My microphone is being quiet. I turned it down from the last stream because somebody was complaining about it overdubbing. So, hello? 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 Let me see if this is a little bit better for everybody. I really don't know why it's being so quiet. Gain? Hello? Hello? Okay, let's see if you can hear me now. Is that better, you guys? Yeah, I'm sorry about that. I didn't mean to have the volume low. I turned it down in my last stream because somebody was saying that it was clipping and distorting the sound. So it must have just been extra low from the last live stream. Study have shown bald people have no hair. Oh my gosh, I'm taking my hat off for that one. That's hilarious. All right, but anyways, so back to what I was saying. We're in the despair phase of the market cycle. This is exactly why everybody and their mom sees another low. And this is exactly why there's a lot of fear in the market. And it's exactly why everybody is concerned and everybody's trying to sell. But don't be that guy. I'm preaching this. Do not be that guy. Okay? And I stick to that strongly. I have a good understanding of these market cycles. You gotta be aware that it's going to trick you. That's why it's so hard to learn trading, is because of the emotion involved. It's gonna feel so right to do exactly what's so wrong. Okay, let me delete this. All right, so I posted this on my trading view today or last night actually. And I basically just said, sick of the correction, read this. And I point out that we're in a huge ABCDE Elliott correction. And I point out that we're oversold on the 3-day and oversold for the stochastic RSI and oversold on the 3-day for the MACD. I talk about the market cycles. I go over all of the things for beginners to do. I talk about how I told people to buy Bitcoin at $570. I talk about how I told people to buy Bitcoin at $1,200. Talk about how I told people to buy Ethereum at 0.03 Bitcoin before it went up, 700% or whatever. I told people to short Ethereum at $400 down to $250 right after it went up all that percentage. I told people to buy Stellar Lumens. This was what I was talking about earlier, right here. This was the Stellar trade that I was showing you where everybody got mad at me for posting this as a buy signal. I literally got direct messages of people hating that I told them to buy, and then it went 5,000% afterwards. So I understand how these cycles work, you guys. So apply what I'm teaching you to your own thinking and see if it helps. See, because I promise you that if you become more aware of your own personal emotions, you'll be able to understand these cycles and you'll be able to avoid panic selling and you'll be able to keep a clear head. I made this chart. I call it the perfect Bitcoin Elliott wave count. And I made this chart December 5th of 2017. And I was able to predict that the top of Bitcoin would be at 20,000 per coin. As you can see, I posted a correction. And then I post that after it hits between 7,800 and 5,000. Now, of course, now that I understand the clear wave count and can see the market cycle chart, I'm confirmed that 6,000 is the bottom, or high probability to be the bottom in the despair phase. I say that it's going to go up afterwards. And I really hold true to that prediction, that we're going to see higher highs in this market. But as you can see, I'm aware of the emotion involved. And I track that emotion, and then I make my support and my resistance. I keep as clear of a head as possible. Here's that triangle in a bigger picture for you. The tops, the rectangles. I'm teaching how this is a little bit volatile. You can't let a little bit of a shakeout a potential false breakdown scare you out of the big picture. Don't let volatility and fear destroy your trading decisions. I also point out that from the wave from 3,000 up to 20, which was the most recent Elliott wave in the market, we're falling back on the .786 retracement. And that's common in single wave sets. So in the full market cycle, it's common that they fall onto the 618, but in a single Elliott wave cycle, it's more common that they fall onto the 786. And I've even seen them often fall onto the 6 or the .88%, and that's what happened with stellar lumens. And I just, I talk about all the different things that have happened in Bitcoin, and I show my charts here. So yeah, go follow me on TradingView if you haven't already, tradingview.com. And then I'm on the front page right now as a top trader, so you can just click right there. I'm the third one down from the top, and you can read through my posts and see what I have to say about all of this. But it's the same thing over and over, you guys. It's the same thing. And that's why I created this channel, was to educate people and decentralize trading and investing so that everybody can do it. So they don't have to go through hedge funds, so that they don't have to have somebody else take 50 to 80% of their profits and only get 20% of the gains back. If you give your money to a hedge fund, you're not going to make that much percentage in comparison to trading your own money. And you can go research, traders from Goldman Sachs will leave Goldman Sachs because they can trade their own money and make way more trading their own money than working at a trading desk, right? And so it's one of those things where I want to bring that to the general public. I want to decentralize investing, essentially. And so yeah, just be aware of these cycles. Don't let them control you. All right, so we are starting to get a little bit of a bounce too. Let's go on to the smaller time frame. Let's do like the 30-minute time frames. Now, personally, I try to avoid smaller time frames unless I'm doing day trading, which I have been doing a little bit of lately. I might make a course on that down the road, like little swing trades, 2 to 3 day setups. So watch out for that. But as you can see, we're already getting that impulse back up. We already have 2 wicks right here. Now, of course, we want to see the resistance be eaten through at 6.6 and at 6.7. We want to see this resistance start to have some breakouts. But this could be the beginning, and we don't know until the right shoulder is actually in place, but this could be the beginning of a little inverse head and shoulders pattern. So we just take this, and we take our line and we remove that line. We take this and we add a head right here. And then we can expect a potential right shoulder to be forming right here on the 30-minute time frame. So watch for that. Watch for a bounce up, resistance to be met, and then a scoop into the right shoulder to be made for support to hold. Now let's check the live dashboard for any new questions. Oh, Wilbert, it's called BLX. It's the Brave Liquid Index. So if you can't go to TradingView and then search it for some reason. You actually have to be on a chart, like opened on a current ticker to type it in. But if you just type in BLX, it says Brave Liquid Index for Bitcoin. And this is just all the other exchanges added up into one. This drawing's a little bit winky here. Let me just remove all drawing tools. So this is basically since the creation of Bitcoin added all up into one exchange. And this is really important because you can see the market cycles from forever ago. Look what happened to Bitcoin. Check this out. This is when Bitcoin got added to the very first exchange ever. And you can see as it gets bought from 0 pennies or 1 penny all the way up to 49 cents, and then it fell back to 18 cents. And then after it did that, it went all the way up to $1.11, and then back down to 52 cents, and then all the way up to $30, and then back down to, this one retraced kind of hard. This one retraced to the 88% retracement. This is what happens in altcoins often because they're very illiquid, meaning that they're not as mature as the Bitcoin market, less holders, less long-term investors. So they retrace really hard. So that retraced all the way back down to $2 again. And then look what happens after it goes to 2. It starts trending upwards again. And bam, just like that, all the way up to $260 per Bitcoin, right? And then all the way back down to 52. And then you go all the way up to 1200 and all the way back down to 150. So this is the history of Bitcoin. Bitcoin knows these swings well. It's not the first and it won't be the last. It will not be the last market cycle that plays out here. But once you understand these cycles and then stick into the big time frames and apply your technical analysis, you're good. You know, accumulate panic, have some long-term holds, have a short-term portfolio that you do trading in. You know, I still recommend that your trading should be 2 to 3 month setups, but like, look at that trend. Look how strong that trend is, you guys. That is such a powerful trend. So, and people are like, oh, this is the last of that. You know, they're like, this is not going to do any higher. This is going all the way back down. So it's just funny to me the way that the cycles work and the way that the emotions work. But yeah, we'll just, as you can see, this is where you want to look to do your TA in long perspective, meaning that if you want to look back to when Bitcoin was created, you use the Brave New Coin Liquid Index. The BLX is the ticker for that, to answer your question. Now let's see if there's any more questions here. Insiders are saying we go down to 5,000. Well, that's really funny because if it's inside information, then why do you know about it? You know what I mean? That's FUD articles are blowing up everywhere right now. And everybody's talking about other lows, new lows. Oh, the cartels are manipulating the market. Oh, there's like 10 million reasons that people are seeing another low. But me and maybe a few other intelligent people on TradingView and maybe a few other intelligent people on Twitter are still holding true to the bullish reaction. And that's because I understand these cycles. And I'm not allowing FUD and news and fundamentals to control my perspective on my trading, because I can get really, really high statistical accuracy without fundamentals or news. And then I don't have to sit and worry about whether the cartel is manipulating the market because I'm accumulating panic. Skirt, I am 21 years old to answer your question. I've been doing this since I was either 17 or 18. I began in 2015. My birthday is May 17th of 1997. Very hard, very depressing. Again, back to the market cycle chart. This one is the simple edition of the market cycle chart. But if you click on the Wall Street cheat sheet, you have a more emotional edition of the market cycle chart, which shows you hope, optimism, belief, thrill, euphoria, complacency, meaning, I don't know what's going to happen here. We could cool off for the next rally. Anxiety, fear, denial, panic, capitulation, aka I'm getting 100% out of the markets. I can't afford to lose anymore. And then anger and depression. Depression, right? That's where the market is in right now. Everybody, you know, in the stream, you see people coming here and saying, oh, I've lost so much money. And they're down on themselves, which is okay. It's okay to be down on yourself, but just don't feel that. Be aware of it and then step back and be okay with it. Be like, okay, but I can move on. I can learn from this. Tell yourself that. Write it down on a piece of paper if you need, but don't let the world put you in boxes, because the world will try to convince you to think a certain way or believe a certain way. And there's a million people that are going to say that you're right, and there's a million people that are going to say that you're wrong. So you have to do what is right for yourself. And that usually means stepping back, reevaluating your trading plans, maybe investing in some education if you need to, which I can talk about towards the end of this video, and moving forward with a positive mindset, trying to learn from all of this and educate yourself so that you don't fall into the same mistakes. Because you can make a ton of money doing this, I promise you. And in the corrections, it's hard to believe that. It's hard to believe that because it feels so hard, right? It's like, oh, wow. You know, it's like, oh, it keeps selling off. I'm scared and scared. Will I ever make money doing this? And I'm sure a lot of you have felt those feelings and those emotions. And you start to get down on yourself or depressed or worried about the way that things are happening. And honestly, like, it's not okay to let that control your life, but it is okay to be aware of that and then use it as the energy needed to practice and learn technical analysis. I learned most of my TA skirt on like YouTube videos. I've watched a few different webinars from people before, nothing too crazy. But I've read a few books on it and mainly just practicing literally every single day of my life for the past 2 years. Since 2016, I started trading. I mean, I was long on Bitcoin on Bitfinex before they didn't allow US customers at $500. I bought the dip at $500 on margin and traded it all the way up to $1,000 and then made some good money on that. And then I bought Ethereum at $6.50 and traded it up. And then I bought Monero when it was under $12 and then sold it at 14 and bought a BMW with it when I was 19 years old or 18. I can't remember exact timelines. So it was just practicing, losing some, winning some, losing some, winning some. You know, I've taken a few big losses in my day, but overall gains exceed losses. And that's because I practiced and I kept a clear perspective. I didn't let emotion control me and I decided to educate myself. And that's one of the most important things. Pygos, you're short right now? You're doing like a baby day trade short? Or are you trying to short down and have support failure type of short? Because we're still on support, man. Just saying, Pygos. We haven't felt support yet. So, but yeah, no, if you're doing a little day trade swing, I hear you on that. But I would not be shorting this market expecting 5,000 as your target. I can tell you that for sure. And I really hold true to that. So yeah, let's take this and let's do on the 15-minute and see maybe what Pygos is talking about there. You trying to short this potential rising wedge down to a double bottom? Word. That's what I'd do too if I was trading baby swings. But I like to stick to 2 to 3 day setups is what I've been practicing more. And I plan on doing a course on those little 2 to 3 day setups and then 2 to 3 month setups and then years. Those are the ones that I play. I don't really mess with 15-minute, 1 minute or anything like that just because it's too volatile and you're trading versus a bunch of algorithms. And algorithms are really, really smart and they know how to keep making money because there's really good developers that design them. So I don't like to fight against probabilities and fight algos, but that's just me personally. All right, so now let's do just a few altcoins and we'll finish up here today. Currently, yeah, just day trading. Nice. Yeah, I love those little swings. Yeah, I agree with Pygos 100%. It's okay to lose money. And if you can't accept that losing money is part of the game, then it will probably, trading is not for you. You should go find something else to do to make money because accepting losses is one of the first things that you learn how to do. So let's see. The mean drew on BTC for the... no, I'm not drawing it steep. I'm drawing it according to the rules in which you draw means. There's rules for these market cycles, and people don't understand that. The mean begins at the period of the first sell-off and rides into the media attention. So, when you're drawing your mean line, you want to draw from the first sell-off out. Bitcoin, Bitfinex, day, take off the log chart, zoom out. So the first sell-off is from 5 to 3. So you take your line and you start from the first sell-off, and you find where it finds resistance in the mean. The resistance of the mean was at 11,000. So this is all despair. We're all in the despair phase of the market cycle currently because we fell below the mean. Now despair can be a bit volatile sometimes because panic can be pretty volatile sometimes. Technically, this could do a wick. It could fall lower and do a wick. It could do a wick where it goes down to 5 and then comes back up in literally 12 hours. That's happened before. Markets are volatile. They're crazy. It's why you have to have trading plans, and it's why you have to understand this stuff, because you might get caught selling the bottom of a wick, and that's literally the worst thing you could possibly do. So, yeah, but we're in the confirmed despair phase of the market cycle. You have to learn how to draw your mean lines. There's rules to this stuff. So Technical Analysis of the Financial Markets is one book that I recommend. And then another book that I recommend is Elliott Wave Theory book. Let me just pull this up. This one right here, Applying Elliott Wave Theory Profitability. This one's on Walmart, I guess, walmart.com. This book is amazing if you're getting new into trading and want to read it. And then Technical Analysis of Financial Markets is another one to read if you're trying to find some education on the matter. But those are both books that I've looked through and read and that I own. So those are some of my favorites to recommend to other people. Yeah, no problem, John. But yeah, so anyways, Bitcoin in the wild with Alan Anderson. Oh my gosh. So yeah, I see this as a triangle correction. I'm allowing for some volatility. I'm sticking to the consolidation range and remembering that false breakdowns are common. So now let's do EOSTA, a little bit of EOSTA real quick, and then we'll call it a day because I spent the majority of the stream talking about Bitcoin, which is actually what I wanted to do. So that's good. All right. So this is EOS. EOS made a new high. This shows that it has the most bullish conviction out of anything else in the market. Now, my original consideration of this was that we were in an ABC correction, but then we made a new low. So what you do is you just adjust your lines and think of it in a new way. And this is what you do. So like this. In this case, I now see a falling wedge pattern, and I'll draw out what's happening here. Like this for EOS. Now we can just take this and we take our Elliott Wave tool and we go from the top A, B, C, D, E. So now with cryptos, often you have a breakout at the D wave before making an E wave, but just understand that one more low in EOS is also possible to happen. But this is a falling wedge pattern, and after this pattern completes, it's going to impulse to new all-time high. It's going to go above $20. I don't want to get into exact targets or anything because that's premium content, but that's the trading plan for EOS, is that this is a falling wedge, and when it breaks out, you're going to see an impulse, and a strong impulse. This one has the most bullish conviction out of anything else in the market right now because it made a new high after retracing its full market cycle. And also has some of the highest trending volume in the market. So this is a good one to be paying attention to. Now, I'll run over my course a little bit if this is something that you are interested in educating yourself further on. The Discord is back, you guys. For everybody that's been like, oh, I miss Discord so much. I'm working to possibly implement it into the website, but we don't know for sure if the chat plugin will work like that currently. But either way, there'll be a chat plugin on the new website soon. So we'll be moved over there. But this is my website, highaltitudecrypto.io. From here, you can click on the shop. If you right on the front page, you can watch my video. I've got a little advertisement video here if you're interested in that. But this just goes over a little bit about my products. I have a 1-year subscription, I have a lifetime subscription, and I have a mastermind subscription, which is 12 weeks of webinars, and then you get to keep your lifetime and your 1-year membership on top of that. And also the mastermind is the full package, so you also get the TradingView course for free being a mastermind. So this is the best thing, especially if you're new to trading and want to get hands-on, because it's webinars, meaning that you literally get to ask me live questions and post your questions, and I talk to you directly every single Saturday for an hour, and I have a mastermind portfolio, so you can literally see exactly the percentages of exactly what coins I'm holding and copy exactly every single trading decision that I make. I've got, 5 or 6 different coins in this portfolio. We track the portfolio as it grows, and you can copy it identically if you're beginning this and just want to start to make money. So that's the mastermind. It's 12 weeks long, but after the 12 weeks are up, you get to keep all of the webinars included in the mastermind that you watched, and then you also have access to the lifetime, the 1-year, and the TradingView course, which is a little bit more for beginners. But you can just click on the TradingView course on my website to understand more about that. The 1-year is great for people that have that are trying to get into this but don't have a lot of money to and just want some of the basics and understanding cup and handle formations, how to do risk management, how to set stop losses, why stop losses are important, talking about market cycles. I teach people head and shoulders patterns. So the 1-year's got 45 different videos in it. That's, just if you're trying to get into this and you can't afford the lifetime or the 12-week. There's a discount in my live dashboard here. If you click in the description, you can use the discount code ACTIVE20 to get 20% off of any of these. But yeah, so that is, if you want to educate yourself and get better at this, that's where I recommend doing it. And then also the books that I mentioned earlier are great reads if you're interested in those as well. So yeah, hey Game Jam, it's good to see you here. Good to see you here. So, oh, by the way, go check out my little brother just released his new album. He's a chiptune musician, so just go over to YouTube and type in Game Jam with an exclamation point and then Sleeping on the Moon. And you'll find that he just finished his album. He's been working really hard on his YouTube channel, been working really hard on his music, and I'm really proud of him. He's growing a lot in his music, and it sounds awesome. So go check out his album. He's got a little discount code running right now, I believe. So it's really good stuff, and you could watch it and listen to it, see if it's something you want in the stream on his channel. So. But yeah, that's a quick little shout out to my little bro. I love to see him tune into these webinars and enjoy it. So, but yeah, hodl, accumulate, panic, let the market cycle play out, and don't panic sell. And that's everything that I wanted to go over today. So I appreciate you all tuning in today. I hope that you're learning. I hope that you can move forward from this and be aware of the emotion that you're feeling right now, not let it control you, and make smart investing decisions, because that's why I designed this channel. I want to help as many people as possible make smart investing decisions. So thank you all so much, and as always, stay profitable out there.